What's up, guys? Welcome back to DCA. So what we're going to do in today's video is explore the dynamic between Bitcoin, how it's valued, and what's going on with the US dollar, foreign currencies, and Bitcoin's relation to gold. How is Bitcoin valued in relation to these different assets? Because right now, if you look at what's going on globally, if you look at the state of the global macroeconomic environment, we're seeing a clear shift. We're seeing a shift from risk assets, from equity markets, from commodities, from even gold into the US dollar. All of these different assets are essentially showing weakness right now with relation to the USD. So we're going to explore that dynamic today. So if you guys like this type of content, don't forget to hit like and subscribe. You could also head over to the Discord channel where we do a lot of discussion of the macroeconomic picture as it relates to both Bitcoin and the economy in general. You could also sign up for the DCA index risk model there, as well as all of the other trading view indicators that I put out all for free. So with that said, guys, let's do it. So I want to start by thinking about this concept here. So how do we normally value Bitcoin? Well, this chart that we look at almost every day is the Bitcoin USD valuation. What that means is X number of US dollars does it take to buy a single Bitcoin. Let's just assume we're in a world where one US dollar equals one Bitcoin. Okay, so we have our world where one Bitcoin equals one US dollar. So this is the DXY. In other words, the USD value in relation to a basket of currencies. So things like the euro, the GBP, the yen, etc. So what happens as this is rising? We have to choose where we put our money. Do we invest it into commodities? Do we keep it in cash? Do you invest in equities? This is what we decide to do with our money. We decide where we will allocate it. So as we're seeing this rise, investors fleeing from foreign currencies, from risk assets, from other types of investment, and they're putting it into the USD because that is seen as a relative safe haven. So if we come back to this example where we're at right now, one USD equals one Bitcoin. Now, suppose the value of the US dollar, however, then rises. Before, one USD equaled one Bitcoin, or I could trade that one Bitcoin for one USD. What if now my US dollar is more valuable? What happens to Bitcoin? Well, in this case, let's assume that the US dollar becomes approximately 50% more valuable. So now I need to give you two Bitcoin to get that $1 that I could have got before. So in other words, Bitcoin has now become half as valuable relative to the US dollar. So I also want to be very clear about what I'm saying here because I think it could be misconstrued. I'm not implying that necessarily as the dollar increases in value, that necessitates that Bitcoin must fall. So what we're talking about here is it's a very interconnected process because you can see that actually the DXY has been increasing in value ever since all the way back here in 2011, essentially since Bitcoin has been around, in fact. These things are relative. So in other words, as the demand for the US dollar is increasing, in fact, that's what you're seeing right here ever since essentially the middle of 2021. And if you look here, we saw the same type of event play out here in 2014 and here in 2018. Now, what is one common theme between those three events? These three areas, so here, and here, have essentially been bear markets for Bitcoin. So we're talking about relative demand here. And what you're seeing now is a relative increase in demand for the dollar. So as the demand for Bitcoin either stays the same or even decreases, and the demand for the dollar increases, you're naturally going to see, the numerator being Bitcoin here and the denominator being the dollar, you're going to see a shift from the value of Bitcoin towards the dollar. So we're not necessarily implying that just because the dollar is increasing in value, that necessitates that Bitcoin must fall in value. Because in fact, Bitcoin could be increasing in value at the same time as the DXY. But that would indicate that there is simultaneous demand for Bitcoin and the US dollar. So what we can do is look at this chart here. So this is a solid measure of liquidity. This is a trading view indicator that I've created. You can actually sign up for this on my Discord channel, as well as all of the other indicators that I put out for TradingView. They're all available for free on my Discord channel. So this shows us essentially the number of dollars being traded per day on Bitcoin. And what we can see is the fact that from our peak, at least, we are down right now around 80% in terms of the dollars being traded per day. And that has essentially steadily been declining ever since back here at the beginning of 2021, kind of when we hit our peak. We kind of topped out at that same level at the end of May as well. But even here in November, when we made this all time high, you'll see that the liquidity was rather low in terms of dollars being traded per day on the asset in relation to that beginning stage of 2021. What does this exactly correspond with? It's been declining ever since this region here in May. We've been declining ever since May. If we come over and look at the DXY, when did the DXY really start to take off? Well, I don't think it's coincidental that the DXY kind of bottomed out at the beginning of May and has been rapidly increasing since. You're seeing a huge flight of capital being taken out of risk assets, being taken out of foreign currencies, being taken out of equities, being taken out of commodities even, and it's being moved into the dollar. That is why you're seeing this relative increase in value from the dollar versus something like Bitcoin. So these dollars that are not being traded on Bitcoin anymore, where are they being allocated then? Well, we know the value of the stock market is rapidly declining. We've even seen, commodities had they had their day in the sun for a bit, but even those have been relatively declining. Just take a look at gold. Even gold has been declining since essentially the beginning of 2022. So these dollars, where are they going? Or this money, this capital, the value stored in these various types of assets, where is it going? It's heading into the dollar, a relative safe haven. So this kind of demonstrates what we're talking about here. So we're not saying that necessarily as the dollar increases in value, that you're going to then see a decline in value of Bitcoin, because they can both go up at the same time, but only if the demand for both of them is increasing at the same time. And if you're only seeing demand for the US dollar, this here, the DXY, the DXY is not a perfect measure of the value of the dollar because it's being judged against a basket of other currencies. But in general, I think it's very representative of the demand for the US dollar. And as you're seeing that rise, what's happening? You're seeing things like gold decline. You're seeing things like the liquidity in the crypto market decline. And that's because those dollars are being reallocated. They're not going towards Bitcoin. They're not going towards altcoins. They're not even going towards commodities or equities. They're going into the US dollar. So that's kind of what you can think of as what's happening here. As we're seeing the USD increase in value, the DXY showing increasing strength, especially since May of 2021, in part, that is the reason that we're seeing the value of Bitcoin fall. It's because of the fact that the dollar is showing so much strength. So that lays the framework then to think about, well, the USD isn't the only currency people are using to invest in Bitcoin. It's a global financial asset. So we have investors using euros to buy Bitcoin, either directly or indirectly. A lot of times they'll convert those to USD and then go on and purchase Bitcoin. But you have to think about it from their perspective, from someone using the GBP, for instance, or the yen. From their perspective, they want to know what is the value of Bitcoin relative to their currency. Because ultimately, one way or the other, they're, if they want to go and actually utilize that cash that they may or may not have made from Bitcoin eventually, they'll want to know what is the relative value in relation to their currency. So one thing we quickly need to do is kind of look at where did we kind of experience some of our support and resistance levels at. So we know that back here at 17.7, that was our low. We crossed just below this December 16 of 2017, that all-time high. And that happened, the close happened right at around 19,200. And so we've crossed below that. This next level below us is down here at around 12 to around 13, 14K, right? So if we really started to crash down below, we have another large support level kind of down in this zone. From the low that we made back here at 17.7, where are we at now in relation to that? And you'll see that we're about 8% above that level. Okay, so we are about 8% above that low that we made back here at 17.7. But what about the euro? Where is the euro in relation to that prior low that we made? Well, the euro is actually up 18%. So Bitcoin in relation to the euro has actually recovered a lot more than it has with relation to the US dollar. So this may be a difficult concept for people to wrap their heads around, but you have to remember it's all from essentially the eye of the beholder. In relation to foreign currencies, Bitcoin is actually showing quite a bit of strength right now. So what we're saying is, while Bitcoin is overall showing weakness with relation to the US dollar, it's actually been showing quite a bit of strength with relation to some of these other currencies. And if we look here, you'll notice that right now we are sitting, with relation to the US dollar, we are sitting below this prior all-time high. You'll see that we're just below it. So over here in 2018. With relation to the euro, we're well above this level. We actually bounced right off of that level with relation to the euro. Now, what about the GBP? And it's a very similar story. So Bitcoin came down to this prior all-time high, bounced right off of it, very similar to the USD. But since that time, Bitcoin is up 20% against the GBP. So this is what I'm saying here. While the USD is the standard denomination that we look at this asset against, you have to remember this is a global financial asset. And so that means there are going to be global dynamics at play, not just the dynamics of the US dollar. And again, what we can do, quickly look at the yen here. So you see a very similar picture where Bitcoin's up around 19% against the yen. And you'll notice that in each case, we kind of bounced right off of this level, right off the all-time high, and now we're sitting well above it. Whereas the US dollar, Bitcoin with relation to the US dollar is sitting below this prior all-time high. I'll just draw the line exactly so you can see it. You can see that right here is the line where we're at right now compared to the all-time high. That leads me to this. What was the narrative for Bitcoin all through its early years? It's a currency. And, now it's digital gold / store of value. Well, if we want to consider this to be a store of value, how are we doing against the store of value? The premier store of value. Well, let's look at the gold chart. Let's just look at gold. Gold has not been doing very well ever since back here in March of 22. And why is that? Why has gold been doing so poorly? It's down 20%. The reason gold is doing so poorly is because of the fact that it all comes back to this. It's because the DXY is doing well. And the DXY doing well is going to have an impact on everything, even the supposed inflation hedge, gold. So as you're seeing a movement towards this DXY or towards the USD, you're going to see other assets come into times of weakness, including supposed stores of value like gold, like other commodities. Commodities have had a nice run at certain points in 2022. But from its peak here back in March, we're down 20% right now, going as low as down around 22%. So as the US dollar shows strength, everything else is showing weakness. So how is Bitcoin doing in relation to gold then? Because, if we're going to consider this asset to be digital gold, well, we need to understand what our performance is against gold. So right now, the Bitcoin gold valuation compared to its 2018 all-time high is around 20% below that. It's right at around 17.5% below right now. Overall, it's actually bled more in relation to gold than it has in relation to the US dollar as we compare prior cycles. So the situation, the technical structure against gold actually looks a lot worse than it does against the US dollar. Because with relation to the US dollar, on the weekly chart, we're still sitting right at that support level. With relation to gold, if we draw that support level right here, we are holding that level as resistance. So we're actually hitting a resistance level, a key technical level against gold. And our next support level against gold is going to be right here, right at this level. And I do think that eventually, as this situation, however it's going to play out, as it plays out, I do suspect that, even if with relation to the US dollar, we weren't to go down to this level here, down to this 12K, suppose we didn't go down to that level, I think what you may see against gold is the fact that we do need to go down and test this level. So this is an important thing to watch. And I don't think that this is a mindset or a way of thinking about a global financial asset that a lot of people have right now. We need to think about its relation to numerous other asset classes, not just the US dollar. But it's also at the same time important to understand how the interplay between the US dollar and all of these other assets is going to play out. Everything that's happening now is interconnected globally. You can't analyze what's happening in the US without what's happening in Great Britain, or what's happening in the Eurozone, or what's happening in China or Japan. You cannot analyze these things in a vacuum. They're all interconnected, and therefore having an understanding, or at least a rudimentary understanding, of how these risk assets are valued against one another, and how, when we're seeing the US dollar increasing in strength, that is going to impact foreign currencies, commodities, equity markets. As we're seeing all of these things play out, having this perhaps a different perspective, I think can go a long way to help you understand exactly what's happening and exactly why we're seeing what we're seeing in these markets. So that's going to be it for this one, guys. Until next time, as usual, see you.